Just getting my poop in the group real quick. Making sure we can do this. Good morning, Brian. Good to see you, man. Pirate trades this morning. Arrgh. How's everyone doing? Feeling good about the world? I hope so. I hope so. Good morning, Bob. I like that. Feeling great. Not a care in the world, guys. Just waiting for the market to give it up. That's it. Hey, Andy. Good to see you. Just waiting for the market. Nothing I can do to make things happen. I gotta let the market make it happen. Then I'll just react to it. Sure takes a lot of stress out of trading when you have a plan to follow, doesn't it? Looks like we're done with high impact news for the day, guys. 28th, Friday, high impact at 8:30. I'm not sure what you S&P watchers saw, but the NASDAQ definitely spiked pretty big. It was, to say the least, untradeable. Way too fast for me to find an entry to move anything. Nothing on the ES. It didn't last long though. By 8:31, it was done. It was back to normal pace, and then it was just waiting for rules to be met again. So it didn't take very long. I usually, whenever there's high impact news, I go make breakfast. I'll go scramble an egg or toast a waffle or do anything other than throw myself in front of that bus. So not a whole lot going on. At 10 a.m. we do have the medium impact University of Michigan consumer sentiment. It could create a little shuffle in there. I like to protect myself on medium impact. Make sure that I've got a little bit of a cushion if I'm in a position, if I'm holding for a bigger move. So every morning, go through, check the news. Same spot every morning. And then we head over to the Nexgen page and we say something clever like everything you need to be successful with this software can be found in the trading guide. Every rule that I talk about, all the good stuff, guys, it's in here. We try not to keep any secrets from you. Try not to say, hey, here's half of what you need, and for 10 low payments of $29.99, you can have the rest. Guys, I'm going to give you everything that you need to be successful with the software. I'm going to give you all the tools you need to read your indicators. That's the goal. I want you guys to become chart readers, because once you're a chart reader, everything else falls into place. True story. So that's what we're going to do. We're going to talk about a high probability trend trade the same way we do every day. And I was working on something this morning, and let me see if I can find out where I put it. So we're going to talk about advantages. And you may dig this, you may not. Naming trades. I think I need to stress that a little more. Naming trades. What kind of trade am I getting into? Give it a name, because when it has a name, you can have rules associated with that name. So if you know you're in a high probability trade, the one that we're going to talk about today, you know that you have momentum, you know that you have a clear path, and you know that you have a defined entry. And guys, this is the best of the best. This is what we're going to talk about for the first hour. We're going to break this down. I'm going to teach you how to study these three advantages, where to find them, what they look like. I'm going to give you everything you need for the high probability trade. And then that's going to open the door for the medium probability trade. And all it is a recognition of advantages. Guys, everything that you do as a day trader revolves around advantages, knowing whether they're present or whether they're absent. So if this is the recipe for the best, I mean the best, well, then I can use these three advantages. And if I don't have momentum, well, then I can insist on the other two and manage assertively. And if I don't have a clear path, I can insist on the other two. And if I don't have an entry, I can insist on the other two. And on that entry, maybe even wait for a confirmation bar. So recognizing advantages is what gets you into a trade. And then when you recognize that they're gone, it lets you know whether you need to manage or avoid. And guys, I'm not here to tell you when to trade or how to trade. And there's a million ways to use this software. I'm here to teach you to read the indicators. I'm here to teach you how to read your charts so you can make the decisions. And that's one of the things that I love about this room is some of you have a level of bravado that's mind-blowing, and you're so confident in what you're looking at that you knowingly maybe break a rule, that you knowingly are okay with the absence of an advantage. And guys, that's cool. That means that you're just where you need to be in your journey. So we're going to keep it simple first, though. We're going to talk about 3 rules. The high probability trend trade. This is the trade. It typically wins 70 to 80% of the time. This is the trade that's going to make you confident. And this is the trade that's going to teach you to read your indicators so that you can recognize those advantages. The rules for the high probability trend trade describe a pattern that has been proven to win more than it loses. And the whole purpose of this very simple high probability trade is to get you recognizing advantages, getting you to be patient when they're gone. Because what you're going to find is that about 90% of your day is spent looking for those advantages, reading your indicators. 10% of your day will be actively trading. But you're going to start to pick things out of the market once you can recognize a couple things. You're going to understand where the market is likely to continue. And you're going to use this spot initially for high probability trend trades. And you're going to understand where the market is likely to go, and this is going to help you with management, taking profits at the right areas, and you're going to know where the market is likely to stop. And this is where you're going to have to make a choice. You're going to see right in front of you, this is something that could stop the market's forward progress. This is something that could end a trend. This is something that could create a giant untradeable bounce. Do I want to trade into it? And only you can answer that question. The high probability trend trade is 3 rules. Each rule creates an advantage. My hope for everyone in this room is that every time you think you're going to take a trade, you declare, I have momentum, clear path, and entry. I have momentum and entry. I have clear path and momentum. Speaking in terms of advantages is going to set you up to understand whether or not you really want to be in that trade. And it's going to set you up to know whether or not you have to manage assertively. So let's keep it real simple. 3 rules, 3 advantages, and understand that these first 2 advantages, momentum and clear path, these are the impactful advantages. This is your core. These are the 2 that when you understand how to identify strong triggers giving you momentum and how to understand whether or not there's something in the way that could stop the market, guys, you're going to have everything that you need to begin to recognize more, to see more, to build a trading plan that suits your need and your pain tolerances. So we're going to do the 3 rules, and we're going to let them happen on only 2 charts. I think learning to trade, learning to read indicators, I think, and this is just me, maybe I'm imparting my own will on you here, I think it feels a lot like this. I think when you come into something new, there's a lot of information coming at you. And one of the easiest ways to do it is to turn that fire hose into a garden hose. To turn that fire hose, all that flood of potential information, and just whittle it down to the easiest, the lowest common denominator. So we're only going to use 2 charts, and we're only going to use 3 rules to teach this trade. Your large chart is a very slow moving chart. It's a broad stroke of a brush. Your large chart will define direction. It'll let you know whether or not you have that first advantage of momentum. And it's where you're going to find whether or not you have a clear path through rule number 2. Your first 2 rules, 66% of your advantages, come from the large chart. Once those rules are met, we're going to get away from that large chart, that slow chart, that very difficult to see change chart, and you're going to go to a smaller chart, a faster chart, and this is a refinement chart. This is the chart that's going to let you see the movement inside of those big bars on the slow chart. It's going to allow you to pinpoint the best of the best entry. It's going to allow you to reduce your risk. It's going to make it so that you can increase your profit potential. In rule number 3, your entry rule is a small chart endeavor. It has nothing to do with the large chart, but it's only looked at when the large chart gives you what you need to go look for that entry. And we use the 2 charts because 2 forces at work in the market. Just believe the metaphor. It makes it easier. The large chart is the large crowd. These are the people that create the trend. They let you know which direction they're going. You can go that direction with them. These are the men and women with all the influence, and they create momentum, and they invite you, hey, come with us. We're going up, and we're going up fast. And these are the same people that react to key areas and they say, all right, better dads, you can see it 20 points in the distance, that big red line. We might stop there. We might exit there. We might fight the sellers there or the buyers there. You know where we're going to react. Pay attention. And guys, when you go with the large crowd, it's effortless and it's stress-free. But there is a small crowd, and there's still big tough guys and gals, and they've got money, and they can create these little retracements, these pushbacks that are counter to everything that the large crowd wants. And we embrace the small crowd. We don't trade with them because they're fighters and they lose up to 70 to 80% of the time. But we can pinpoint through rule number 3 on that smaller, faster chart where their failure is most likely to happen, where the market's most likely to bounce and continue with the overwhelming strength of the large crowd. So that's what the 2-chart system does for you, is it lets you see all the advantages created by the people in charge, and then it lets you capitalize on the failure of the people that like to fight. And it's just a pattern. That's all rules are. So we're going to learn them. We're going to learn the trigger line and Fibonacci rules. It's a description of a pattern. That's all it is. And that pattern that we're describing through momentum, path, and entry has been proven, and you can prove that it wins more than it loses. 2-chart systems, all you need, Paul. You guys have the ability to simulate and to practice and to make mistakes. And the first step in becoming confident ASAP, guys, it's post your pictures in the room, post your trades in the room, post your questions in the room. The magic of what we do with Nexgen, obviously it's the indicators because I think they're the best in the world. But it's the education. You have the ability, 15 hours every week. Post in the room, ask a question. Hey, Mark, I took this trade. Did I read my indicators correctly? Hey, Mark, this was my entry. Was that my best entry, or was there some place where I could have done this a little better? This is where I got out, Mark. Does that make sense, or could I have held longer? Did I need to exit sooner? And guys, if every time you post in this room, you identify the momentum, the path, and the entry that you saw and used, I'm going to give you feedback on it and make sure that you're reading your indicators correctly. That's it. I'm not going to judge you on your trade. I'm going to say, absolutely, that is momentum. You better believe that had the potential to break. And your entry at an area inside of favorable large triggers, well, this is the best you could have possibly done. And I like your exit. Even though the market continued in the direction of your trade, you took an exit at an area that could have stopped it, and that makes sense. And every time you post in the room, all it is a private session with me. I'm going to hand you a plan, and it's going to be 2 trades. It's going to be that high probability trend trade when all the advantages are present, and it's going to be a medium probability trade, that one where you have to identify that there's a little bit of a problem and manage assertively. Both of these are coming to you, but understand that it's the high probability trend trade that's going to make it so that you can recognize and execute on the medium probability trades. Learn your foundation first. And you've got to learn the looks. You've got to understand what it looks like to have your rules met so that you can follow your rules. And that's where the second piece of becoming a confident trader ASAP comes in. Use the spreadsheet. Guys, I put this in the room every day. We update it almost every day in this classroom. Feel free to just keep downloading over it. Guys, the first tab on the spreadsheet is what it looks like to have your rules met. Because if you are going to embrace the advantage of trading a pattern that wins more than it loses, you've got to know what the rules look like. And you've also got to understand what it looks like when the rules are not met. So in this spreadsheet, first tab, you have strong triggers. Rule number 1, about 50 pictures with descriptions, letting you know exactly what it looks like to have strong triggers. And then I've got, 29 pictures of weak triggers, of no momentum, of not having advantage, of a great reason to embrace the 90% and do nothing. You have what it looks like to have a clear path, no termination conditions. And then you've got great pictures. This one has almost 90 pictures in it, I think, because this is the most broken rule with you guys. Showing you what it looks like when you don't have a clear path. And if you commit it to memory, you can look at a live market and say, oh my gosh, this looks just like the 83 pictures that told me don't take a trade into the area. And then there's a little bit on the high probability trend trade entries. There's the client trade section. This is what gets updated almost every day. You guys throw these amazing trades in the room, using the advantages, managing them beautifully, and I just steal them and I drop them in here. And there's like, we're probably coming up on, I don't know, 125 times 3, 375, almost 400 pictures probably here of you guys using the software, embracing advantages, finding a way. There's the entry sequence for longs and shorts for the highest probability trend trade that we teach. There's a very basic management plan that's going to come to you in the plan I give you. And then there's some pictures of how you can start growing outside of the basics as you learn to read your indicators. For you guys that are adrenaline junkies, you want to be a NASDAQ trader, it's not the same. I teach on crude oil, I teach on the S&P. They're slow, mellow, they're very polite markets. The NASDAQ is a methed up hillbilly, and he's got a four-wheeler and he needs you to hold his beer. So careful as you make that transition and going over to the NASDAQ. Remember that there's a learning curve. You're going to start to see patterns as you learn to read your indicators. So your job, if you really want to get to where you want to be, and I say that because I can't make you do the work, but if you really want to get to where you want to be, start taking pictures and annotating them. Take a lot of pictures, guys. The people that take the most pictures and the people that post those pictures in the room get to where they want to be the fastest. If you look at my library, in 2025, I'm at 1,900 pictures so far, guys. We're not even into the 4th month. There's a reason that I can read my indicators really well. I take pictures and annotate of everything that I do in the market, everything that I see, every pattern that I begin to recognize, and even more so, every question that I have. I take a picture, I annotate it with the question, and then I send it to John Novak because he mentors me the same way I get to mentor you. So fill up your section, build your trading plan. And then finally, trade tracking sheet, guys. Everything you do, every time you take a trade, you pull the trigger, drop it in there. Here's a picture of my trade. This is what I did. These were my advantages. And I think most importantly, this is what Mark said about it. This was the feedback I received on my chart read, on my entry, on my exit. And what's going to happen is you're going to start to see the same feedback over and over. Sometimes the feedback's going to be, holy smokes, this is the best of the best. Don't miss it. This is your trade. Put it in your plan. And sometimes it's going to be like, man, that divergence on a 50-50 got you again. This is the pattern that's taking away your success. This is the pattern that's creating more losers. And guys, everybody has a thing. Some of you love to trade in determination conditions. Some of you love to believe no momentum is the best momentum ever. Some of you absolutely love to get in on the wrong side of the triggers, and you can't figure out why the hell you keep losing trades. Guys, my job is to talk you through all that. And then more importantly, give you a solution. Give you a fix for anything that needs fixing. And that's kind of what we do in this room. We learn, you post, we're going to keep it simple. And guys, we're going to rock star it today. So post in the room, lots, don't hold back. The record for one person posting in the room is 77 pictures in a day. 77 pictures, and every one of them got feedback. But remember, if you want feedback on 77 pictures, it needs to be 77 annotated pictures. You have to tell me what your read is. If you flood my room with a bunch of pictures but don't bother to tell me, we're going to high five, I'm going to say good job, and I'm going to move on to the people that ask for help. And please show me entry to exit, guys. Entries are awesome. Exits give me the opportunity to discuss management with you a little bit. So give me both. Let's move forward. What are we looking at? If you're brand new with me, you're like, holy crap, there's a lot of stuff on these charts. There's not. There's trigger lines on both charts. There are large triggers. These are dashed. These are slow. And then there's fast triggers. And these are solid lines. Small and large. That's it. Fast and slow. You don't even need to know fast and slow. You need to know that 2 solid lines is a small trigger. 2 dashed lines is a large trigger. If they're going up, they're green. If they're going down, they're red. And guys, you're going to use triggers in everything you do. You're going to use triggers to make sure that rule number 1 is met, to define that momentum. You're going to use triggers to identify termination conditions to make sure you're not trading into an area that could stop the market. And you're going to use those large triggers to define the perfect entry, getting you into the market where the market is most likely to continue. So know that there are small and there are fast. And then both charts have areas. Areas have names. It doesn't matter how the areas come to be. It really doesn't. But we'll talk about it. So divergence highs are a magenta line. That's the important part. But a divergence line, it prints if there's a loss of momentum at a pivot. So the buyers are in control, cranking, everything's up, and right at that specific price, the sellers say, nope, no more. We're going down, and we're going to rob you of your momentum. You'll see this pink line, and it becomes like a line in the sand. If it happens at a low, you'll see a cyan line. You're going to see Fibonacci resistance, these red Fibonacci lines, all day long, guys. They can stop the forward progress of a market on the large chart or the small chart. Fibonacci support does the same thing when the trend's going the other way. Yellow 1-to-1s are on both charts. If the market's going up, they can behave as resistance. If the market's going down, they can behave as support. The important thing is that you can name them because your rules talk about them. Understanding that a magenta high, a red fib, or a yellow 1-to-1 can all behave as resistance, and understanding that a cyan divergence low, a blue fib, or a yellow 1-to-1 can all behave as support. You're going to use these not only for termination conditions, but also for entries. So let's go through rules. If you guys have questions, interrupt me. If you post in the room, we get those in the second half. But if you have to go to work early, maybe you've got a doctor's appointment, the dog's got to go out, guys, let me know. Just drop a little note. Hey, Mark, I got to split pretty soon. Can we take a look at my pictures? The answer is always yes. Large chart leads the way, guys. Get that cross-stitched into a doily. Large chart leads the way. Large chart is going to give you 66% of your advantages. Tee times count, Ron. I've got one tomorrow morning. Yay! Of course, I've never played. I'm excited. Large chart must have strong triggers because strong triggers provide us momentum, guys. And the only way you can have those is if you're cruising with the large crowd. If the background is green, the market's going up. If the background's red, the market's going down. You're going to look for rules to be met to go the direction of the trend. That's it. That's the easiest path. And in order to have strong triggers, in an uptrend, both small and large triggers must also be green. And in a downtrend, both small and large triggers must also be red. And that's kind of a little cheat code, keep you safe moment, guys. If the colors don't match, you don't have strong triggers. Because strong triggers means that your small triggers in an uptrend have broken above and away from large triggers. We're going to draw a little bit today. And in a downtrend, your small triggers have broken below and away from the large triggers. And here's your little visual. I want you to picture scissors. And when scissors are open, you can get some work done. When scissors are open, you can cut, guys. That one got a little wonky. And that's the look of strength always. Separation means strength. Open scissors. And when you have this look, the odds are favorable for the market to continue in the direction of the trend. When you have odds favorable momentum, as we call it in the room, OFM, you're going to see it on charts. Guys, this is the look that gives you the potential to break key Fibonacci areas. And this is the look where we're going to buy or sell Fibonacci support or resistance on smaller, faster charts. They look like tails on the large chart, but every time you see a tail with that level of momentum, that was a potential entry on that tiny little chart. This is also the look that can cover some mistakes that new users tend to make. This is the look that gets some people excited about fudging their rules a little bit, because with a little bit of study, you're going to realize that momentum is difficult to stop on a large chart, but it can be stopped. And you'll know that it's going away as the small triggers work their way back inside of the large. When your scissors close, you can't cut with closed scissors, ladies and gentlemen. You can only take a stab at it, right? So when I have weakness, closed scissors, anything can happen up or down. And guys, very often anything happens up or down. You get big ugly retracements from the middle of nowhere. This is where key Fibonacci areas tend to hold. And guys, I'm telling you, when you get into the market with anything can happen triggers, it's a true story. Anything can happen. So here's a large chart, and let's just look. Let's do this. Let's take all of the indicators off. I'm going rogue today, guys. I'm changing the plan. We're doing new things. I'm going to leave everything off with the exception of trigger lines. Separation means strength. There's your weak triggers, and look at the retracement. Pretty cool, right? Better, Dad. Didn't get the separation. Look at the retracement with the separation. Down it goes. Guys, this is without the benefit of Fibonacci. Strong triggers pushes. Weak triggers is where it headed down. Strong triggers pushes. Weak triggers is where it headed up. Do you guys see it? This is rule number 1, ladies and gentlemen. Strong triggers lead the way. Strong triggers push a market. Strong triggers create advantages that are hard to stop. That's rule number 1. Once rule number 1 is true, we're going to treat these like a flow chart. If my large chart has strong triggers, then my large chart must have no termination conditions, because it's important to me that I have room to my profit targets, and it's even more important to me that I just call it a clear path, because it's easier to say. So what's a termination condition? It's a large chart area. It's a horizontal line on a large chart. It is blue Fibonacci support or red Fibonacci resistance. It's yellow 1-to-1s. It's those divergence highs and lows. And every one of these areas are the areas where that large crowd is most likely to react, where buyers buy and sellers sell, where fights and reversals take place. And guys, you know where they are long before the market gets to them. You know Fibonacci support is down here when the market is all the way up here. And you know Fibonacci resistance is up there even when the market's trading all the way down here. So if this is where the large crowd's making decisions, or most likely to make decisions, if this is where reversals are most likely to come from, if this is where untradeable bounces can occur, guys, we're going to let price get to the decision-making point. We're going to let dynamic Renko bars find their way to resistance. And once price gets to resistance, I'm done with price. I don't need it anymore. I'm going to let the trigger lines tell the story. So when price reaches resistance, every one of you in this room has to say out loud and scare your pets, where are my triggers? And if your triggers remain below resistance, whether it is a divergence high, yellow 1-to-1s, or a red Fibonacci area, guys, this is a termination condition. And one of 4 things are going to happen. The area is either going to break. Very often it takes momentum to get through these areas. The area could create an untradeable bounce, meaning some sort of reaction that's big enough to take you out of a long position. There could be a fight right at the area. Bob's got a great picture of that we're going to see in a little bit, where the buyers and sellers duke it out right at that key area, and you don't have to be a part of their fight, or that resistance is going to reverse the market completely. And this becomes an important concept, because if price reaches resistance and all of my triggers remain below, and then from that key area, the decision made by the large crowd was so impactful that my large triggers, those slow triggers, go from green to red, guys, this is what we call a strong top. And a strong top sets you up for the highest probability trend trade ever. The strong top is the first rule in the medium probability trend trade that I'm going to give you on that plan. So recognition that these areas can stop the market. When price gets there, wait for the reaction. If rule number 2 is not met, that means no trades into the area. And it costs a lot less to wait for the reaction than to predict it. From that strong top, all that momentum, the market is screaming down. Maybe you found an entry and you look in the distance and you're like, oh my gosh, there's Fibonacci support. Here I come. Price reached it. My triggers are above. What a wonderful place to exit. because this is an area that could stop, could create an untradeable bounce, could break, or could reverse the market completely and become a strong bottom. So the simple recipe is, if price reaches an area, I ask myself where my triggers are. And if my triggers remain below the area, no trades into it. So let's put our indicators back on and let's see if there's any truth to that recipe. Wow, even as it loads. Guys, this is crude oil. Termination, 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 termination. There's a lot of fighting going on in crude oil this morning. You guys don't have to get caught in it. Let it break. Let it clear. Wait for them to give you the potential for a break. Wait for them to give you that clear path. It's gonna help. So when they break, and they break all day long, they really do. Crude oil's not doing it today, but very often these areas break. This is what it looks like. These are your three options. And I don't care if you are day 1 or day 110. These are your three options. If price reaches resistance and the triggers remain below, the best, safest, highest probability decision that you can make is to wait and see what the reaction is. It's either going to create an untradeable bounce, a fight, a reversal, or everything's going to start to break through that area. And if your small triggers absolutely smash through the area, but your large triggers haven't made it yet, this is showing you the potential for that area to break. This is what we call a 50-50 look. This will be your second trade. This will be the majority of your trades. But the path isn't clear yet. With 50% above and 50% below, it's only potential. An area is not considered broken until both lines of the small triggers and both lines of the large triggers clear Fibonacci resistance. And then Fibonacci resistance behaves as support. And the path is clear, and it's going to remain clear until you reach the next line. And once you reach the next area of resistance, we go right back to number 1. So no trades. Manage assertively. Make sure you're not giving up any other advantages. And with this momentum and a clear path, I just can't wait for an entry. Once you know 1 and 3, it sets you up for 2. Same the other way. Price reaches Fibonacci support. No triggers break. I'm going to sit on my hands and wait for the reaction. With the potential to break, I may find an opportunity, but I'm going to manage it assertively because the area is not broken yet. But with small and large below, odds favorable momentum, the area is broken, support is resistance, guys. I'm going to look for my opportunities. I'm going to look for my entries, and I'm going to continue to look for my entries as long as those first 2 rules are met. And those first 2 rules are met until I reach the next area. And then I go right back to number 1. So live market again, here we go. Weak triggers and a reversal. Potential to break but didn't. Perfect termination condition. Potential to break, and look at this. There's one of those tails. Let's see if that was an entry. Potential to break but didn't. Perfect termination, perfect termination, perfect termination. Potential to break but didn't. Termination. Weak triggers, reversal. And then guys, there was a little potential right here, but it didn't happen. And now we're looking at a market that's caught in between Fibonacci areas, and you guys are embracing that 90% because there will be times when your path isn't clear because areas are stacked a bit. Crude oil's putting on a termination lesson for you today. You should go back and study it. Guys, this is 90% of your day, and it's okay to do nothing. It's okay to not be in the market. I took 2 trades this morning. That's it. 2.5 hours of watching the market, I took 2 trades. I was in the market for a total of about 2 minutes this morning. Futures markets trades billions every hour. You need to capture $400 a day to be in a 6-figure income based on your trading, guys. Learn patience. Insist on momentum and path, and it's going to take a lot of the worries out of your day. Everybody good with that? That's rule number 2, guys. That's a large chart rule. There's going to be times when the small chart, and watch how the correlation goes here. Your small chart will show you change that you can't see on a large chart. So if I take one bar on a large chart, let's just do a little for instance here. That one bar on a large chart, it is not, oh, because that's way back. Let's try this again. Sorry. We'll slide it over. One bar, here we go, on my large chart are all of these bars on the small chart. You guys see that? Momentum stays the same, but there's a full retracement, a full bounce, a full continuation down inside of that one bar. This is how the small chart can show you change that you don't see on the large chart. So there's one termination condition that is true on a small chart. The only time I'm going to let the small chart tell me that rule number 2 isn't met. And that's going to be 3 divergences in the same price range. 3 losses of momentum in the same price range. Guys, 3 divergences in the same price range can terminate a trend, can create an untradeable bounce, can create a fight. This is a termination condition. The advantage of rule number 2 is no longer in play if you see this. This is the only time I will refuse to take a high probability trend trade if the large chart is perfect, because this is the small crowd giving me a heads up that what I see on the large chart is changing. So large chart leads the way, has momentum, strong triggers, trading with the trend, not trading into areas that could stop the market. Guys, this is the core. Learn these 2, commit these 2. Study them over the weekend, come back Monday a better chart reader. Once those rules are met, we're going to go to the small chart, to the fast chart, to the refinement chart. We just looked at that refinement process. It's amazing, right? And it's so amazing that your entries can be super precise. You're going to use a limit order, which means you're actually going to wait for the market to come to you. How cool is that? We don't chase trades. We're better than that. We make them come to us. And we're going to use a limit order to buy or sell a pullback. That pullback is the fight from the small crowd. They're saying down when everything on your large crowd says up. So we're going to use a limit order to buy or sell their pullback, and we're going to do it at an area, at a fib, at a mid-band, or a yellow 1-to-1, because the same way those lines on a large chart could stop the forward progress of the trend, they can stop that small crowd. They can create a bounce in the direction of the trend. That's our entry. But the key is those areas have to be inside of triggers, because triggers are going to define where the retracement is most likely to occur, because price returns to large triggers happens all day, every day. What do you mean price returns to the large triggers, Mark? Well, thanks for asking. Let me show you. Price accelerates away from the large triggers, and it pulls back, and it does it again, and it does it again, and again, and again, and again, and again. Guys, this is a gospel truth. Price comes back to that big, slow moving average. That's how we get our great entries. This happens all day, and this happens on both charts. So your entry chart has the 5-1 large triggers. You're going to use those to gauge momentum versus the small. But your small chart also has the 13-2 large triggers, because price could return to either the 5-1 or the 13-2 large. So you're going to use those large and what we call synthetic, the 13-2, and this is going to define where the retracement is most likely to occur. This is going to define where those down bars are most likely to go. And guys, you're going to use this because this is going to help you pinpoint your entries. And there's a way to make your entries even more accurate. And that's insisting on favorable large triggers when the large and the synthetic are overlapping like two snakes riding piggyback. Because what you've done is you've turned two potential retracement zones into one. And then when you put fibs, mid-bands, and yellow 1-to-1s inside, guys, you have the smallest little window for entry. And that's the way to do it. And Lonnie says, Mark, I got to go to work. Give me some feedback. All right, let's see, Lonnie. You had a strong bottom, which means there was a termination condition that reversed the market. You had strong triggers, which is odds favorable momentum, which means that this is a market that's likely to continue in the direction of the trend. Your small triggers got above resistance, just barely, but they did. Your large triggers remain below, so you've identified it as a 50-50 So you know your path isn't clear. You take a pullback directly to support inside of triggers, and because it's not a high probability trade, you're getting paid, and you got paid before the market ever even went back to that previous high. And this is an absolutely beautiful trade, Lonnie. And I think that it's safe to say you have found your mojo, my friend, because you keep showing me these perfect trades. Nicely done. Did you have any questions on it? And you know what I like? Set this trade up with a pending order and left to do something. Guys, that's confidence in your methodology. That's understanding that you're never in charge of whether you get filled, whether you win, whether you lose. But once you recognize the pattern, it takes a lot of the stress out. Lonnie, I like that you wrote that. And to come back and hear that your order's filled and your targets are hit, pretty outstanding. So let's define an entry, guys. Let's use a limit order to buy or sell a pullback at an area inside of triggers. And amazed is a good word. I think the methodology is amazing, especially once you trust it, because then you do things like put your limit order in the right spot and put your stops in the right spot. And just say to yourself, I'm done. It's either going to win or lose. But this is a pattern that wins up to 70 to 80% of the time. I'm willing to take the hickey. Guys, that's when you know. That's when you know you're on your way. So let's go through an entry. Let's define it. Once the rules are met on the large chart, I can't stress that enough. Once the rules are met on the large chart, I'm going to turn my attention to the small chart. And guys, in this particular instance, my large chart looks like this. My large chart is screaming up with the best momentum ever, and there's nothing in the way. And my small chart is going to be screaming up with it. And I need a reversal bar. I need the small crowd to fight. As tempting as it is to just jump in, I'm going to learn the high probability trend trade first, which means I'm going to wait for a reversal bar. I'm going to wait for the small crowd fight. I'm going to wait for a down bar after all of these up bars. And I know price tends to return to large triggers because Mark said it, and Mark wouldn't lie to me. So we're going to create a zone. Where's the retracement most likely to go? Where's that fight most likely to happen? Guys, somewhere from the top of the triggers to the bottom of the triggers. This defines where the retracement is most likely to occur. Guys, the tighter these large and synthetic are, one on top of the other, the smaller this area becomes. Reversal bar is not my entry. It gets me looking for the retracement zone. The retracement zone is not my entry. Now we're going to start to refine a little bit. Once I know where the market may retrace, I need to define where the market may bounce. And that's using areas inside of triggers. All caps, inside of triggers. Fibs, midbands, and yellow 1-to-1s, ladies and gentlemen. These yellow 1-to-1s are not inside of triggers. I'm going to ignore them. This divergence low isn't even one of the areas. I'm going to ignore it. I'm looking for fibs, midbands, and yellow 1-to-1s in that retracement area, in that retracement zone. Guys, this is where the small crowd is most likely to fail. This is where the market is most likely to bounce and ricochet in the direction of that odds favorable momentum and that clear path. So you go from, holy smokes, it's going without me. Okay, that's where it's likely to retrace. This is where it's likely to bounce. Come get me, market. And you're going to activate a limit order, a couple ticks. Just a couple ticks above that highest point of support inside of triggers. Just a couple ticks above that highest point of support inside of triggers. Lonnie's saying, hey, Mark, I learned this lesson. Look at my entry. 2 ticks above the triggers. Such a great trade. And they're either going to get you or they're not. You've done all you can do, guys. You followed your rules. That's the only thing you'll ever be in charge of. But if they come for you the way they came for Lonnie, well, now you're in a long position. And if it's really a high probability trend trade, you're in a long position with the advantage of a market where the odds are favorable for it to continue up because of those strong triggers. And you're in a long position because with all of that momentum on your side, there's absolutely nothing in the way in that large chart to create a bounce. And you are in a position, having entered precisely where that small crowd was most likely to fail, where the market was most likely to bounce and continue in the direction of the trend. And guys, this is your core. This is your high probability trend trade. This is your best of the best. This is the one that teaches you to read your indicators. And understanding where the market is most likely to continue, waiting for the reversal bar, identifying the triggers, the areas within, and putting that limit order 2 ticks above it. Because remember, the large chart's going north fast. Once you understand where the market is most likely to continue using that very basic recipe, you understand where the market shouldn't go. Guys, anything below the triggers is beyond where the market is most likely to retrace. Anything below the areas inside of those triggers is beyond the area where the market is most likely to bounce. You don't want anything to do with the market back here, guys. Rule number 3 is gone, off the table, no advantage. This is where the market should not go if this is going to be one of those 70 to 80%. Reversal bar starts the pullback, is not your entry. Triggers define where that retracement is most likely to occur. Areas inside show where it's most likely to bounce. And anything on the wrong side of those triggers is not a part of the window, not a part of the equation. This is where the market should not go because the small crowd has blown through everything that gives you an advantage for entry. You're going to use that concept of identifying where the market is most likely to continue because it shows you where the market should not go, and that's going to be your first stop, guys. Your first stop will be where the market should not go, generally 4 to 5 ticks beyond the triggers. It's kind of cool because when you trust the methodology, you'll say, they're going to have to come get me. They're going to have to break through all the good stuff to take my money. And it's amazing how often they can't. And they can 20 to 30% of the time. You don't get to pick when, but more often than not, that market's going to bounce in the direction of the trend. So we have to learn the pattern. You have to learn the pattern. I know the pattern. Lonnie knows the pattern. He's proved that. So we talked about those tails on the large chart. I'm going to give you guys how to study this. So hopefully this weekend, if you're struggling with entries, if you're struggling with this pattern, you go back and do this drill. When I have odds favorable momentum, when I have a clear path or even the potential to break, I'm going to circle the bottom of the tail on my large chart. And guys, this is historical. So I'm going to come back and I'm going to say, all right, let me see where the market's trading now. Well, actually, we kind of had to go back there, didn't we? Crude's been caught in a range. I have momentum and the potential to break. I'll circle a tail. Momentum and the potential to break. I'll circle a tail. Oh, look at this one. Momentum and a clear path. I'll circle a tail. Guys, I'm not trading. I'm going back historically. I want to go see what those tails look like on a smaller, faster chart. So I back it up. Dun, dun, dun. Not a lot going on in crude today. And this one pulled back, and it didn't make it to the area inside of triggers. And guys, while this is still a pretty cool looking pattern, probably not my trade. My rules weren't met. It didn't get to my entry area, and I wasn't able to trade that potential to break. But that's okay, because just a little bit before that, price pulled right back to resistance inside of favorable large triggers with momentum and path. Does everybody see it? This is how you're going to study. So when it all comes together, you should take the picture. And you should say, that's a go button, not at all what I need. You should point it out and say odds favorable momentum. And you should point it out. And even if you don't want to type out the whole thing, clear path. And this is the one I think you should take the time to type. Pull back to an area inside triggers. Guys, this is a trade that typically wins 70 to 80% of the time. These rules describe the pattern. Take that trade, hit that share link on there. Go to your spreadsheet and drop that perfect high probability trend trade into your trading plan. Just call it perfect. And that's how you're going to study this trade, guys. And this is how you're going to develop a little bit of faith in it. This is how you're going to have the courage to activate that limit order. And more importantly, this is what's going to give you the ability and the strength to put that stop where the market shouldn't go. So that's our first hour. Those are our rules. Are there any questions about the high probability trend trade? It's the same pattern over and over. We had another one, didn't we? Should we go back and see what that one looked like with the potential to break? Right back to the mid band, right inside of those triggers. Guys, I can't make this up. I actually don't have to make this up. These are patterns that repeat themselves all the time, every market. All you have to do is learn it and be willing to sit still when there's nothing to do. Be willing to not take a trade directly into an area. So, also going to give you the quickest way to get there. My goal for you is that you look at the large chart and understand momentum and path first. Once you understand momentum and path, this is your core. You have everything you need to create your own plan that's consistent and profitable. It's going to open the door for all the other opportunities. So the easiest way to get to where you want to be, and I'm going to say it again, is not to take trades. Guys, you are anxiety and fear ridden when you take trades as a brand new user. Go take pictures. Take 25 pictures each, guys. Strong triggers, weak triggers, clear path, termination conditions. You could do this over about 2 cups of coffee on a Saturday morning. But don't just take the pictures. Take the time to explain why the rules are met. So if you take pictures of a termination condition, say, price reached the area, my triggers remain below, this is a termination condition. This is rule 2 not met. Hell, you could go even further and say, this could create an untradeable bounce. This could create a reversal. This could create a fight. This could break. I don't know what the reaction is going to be. I choose to do nothing. That's a little more wordy, but that's going to get you there. And then post these pictures, guys. Post them into the spreadsheet. I've given you a giant head start. And there's no doubt in my mind, and I say with the utmost confidence, that if you go through this drill, you won't accidentally trade without momentum. You'll do it knowingly. And you won't accidentally trade into a termination condition. You'll know exactly what you're getting into. Doesn't mean you won't take the trade, but it means you're going to manage it a little more assertively because you know it's not perfect. As you go through this drill, this is your high probability trend trade checklist. Guys, this is the highest probability way that I know to enter the market in one of these high probability trend trades. And it starts from a strong top or bottom. So it tells you, look for it. It's not mandatory, but this is all the warm fuzzies, guys. And a strong top or bottom is a no triggers through termination that reverses the market. So when you're looking in the market, you can say, wow, that's a termination condition. None of my triggers got through. Egads, it reversed the market. Now it's a strong top. That tail right there might have been the best of the best to get you all the way to support. And this is a termination and none of the triggers broke, but it's not a strong bottom until it reverses. So know what it looks like. You're going to need it for that 50-50 trade. And then the checklist says odds favorable momentum, both charts. The rules for a high probability trend trade are strong triggers on the large chart. The best way to take it is for both of your charts to have odds favorable momentum. Separation is strength, closure is weakness. Know the difference between the two. Know what you're getting into. Guys, this is the one that I want you to spend extra time on. Is it a termination condition? No trades. Wait for the reaction. Is it only the potential to break? I might find an opportunity, but I have to make sure that I manage assertively. Or is it a clear path? Trade away until I reach the next area. Know the difference. It's going to help you decide how it needs to be managed. Know where the market is most likely to continue so that you can define where the market shouldn't go. And then here's the same checklist. Print this out, laminate it, put it on your desktop. Every time you think you want to take a trade, glance at it. Are my rules actually met? Do I have these advantages? Or if I don't have one of these advantages, am I willing to take it anyway and manage assertively? That's a question you have to answer for yourself. Take these same words in every chart that you post in my room strong triggers, termination conditions, entry inside of triggers. Reference them. And if you're doing market replay over the weekend, is anybody going to do market replay over the weekend? I hope so. I do it almost every weekend. When you think it's time to take a trade on market replay, hit the pause button and see if it really is time to take a trade. And what happens is instead of trying to make all the money, Bob, taking the wrong trades, hoping it works out, you can see the potential of following a solid plan. Gotta rib you a little bit, Bob. Right? Guys, the testicular fortitude present on the simulator is going to haunt you when you go live. So make sure that you're practicing the correct rules and not just getting lucky. So I'm going to give you that as well. I promised you everything. And it's going to take us over to the KISS plan. And the KISS plan is a stepping stone in your learning journey. This is not your get-rich trade. This is the one that teaches you to see it. Thank you, Ron C., for that wisdom. Guys, this plan is designed to optimize your chances of success with the high probability trend trade as you learn to read your indicators. And then through simulation, study, class feedback, and continuous practice, you'll write your own plan. You'll find your patterns. You'll create your management approach. But until you're capable of doing that, this plan has actually gotten brand new users funded in those prop firms in the first 30 days because it's simple, because it's very black and white, because it's 100% if then. And there's two things that you have to know before you sit down and you're not on sim, and this is so important. You have to know why you'll enter a trade. And the most generic Sunday school answer is because my rules are met. That's why I'll enter a trade, because I've got a statistical advantage, because I have an edge, because I've done the study and I know that my rules are a description of a pattern that has been proven. And guys, it has to be proven to win more than it loses. And if you verify it through study and you practice it and you trust this pattern, you'll never miss that high probability trend trade. And even if it loses, you won't miss the next one, because you know trading isn't about one trade, guys. It's about a collection of trades. It's about 20 to 25 and seeing what the results are over a period of time, which is where consistency pays big dividends. And then you have to know why you'll exit. And this is hard. Exits are taken either at predetermined profit targets, and those profit targets have to make sense, guys. Or if the advantages that got you into a trade are no longer present. So if I enter a high probability trend trade at an area inside of favorable large triggers, I'm going to put my protective stop where the market shouldn't go, because when it gets there, my advantage is gone and I'm willing to take that loser. If I enter a high probability trend trade and everything's going my way, but then the market gives me 3 divergences in the same price range, I'm willing to exit that trade because my advantage is gone. And I'm not about hope, guys. I'm about getting paid. That's the goal. So in the KISS plan, first we define our entry. And I haven't done this in a while. I'm going to share this with you. The easiest way to get to where you want to be is never fight the large chart. That's the recipe for financial suicide. Don't fight the large chart. Don't fight the large chart momentum. Don't fight the large chart termination conditions. If you can eradicate those two from your day, you're better than 70 to 80% of most traders. TechSmith is scrapping. Well, they're not updating it anymore, is what I read, Andy. You can still have it. You can still use it. They're just not going to support it anymore. So I'm a fan, guys, of Snagit. It's like $64. And Snagit is everything. It is all the bells and whistles, everything you could ever hope for. There are so many styles that you can do. Like when you go to the arrows, every time you try to use it today, your Norton's quarantining it. Uh-oh. Like I've whittled mine down, but there's so many options for you to do stuff. I love Snagit. All right, so we define our entry. It's like 65 bucks, Andy. If you're going to do this for a career, that's a pretty small investment. Um, Once you enter, you have to manage. And I like this part. I like talking about this part because management for most of us, I know it's true for me. It was true for me immensely. Management is where we get nervous. Nobody has any problems pulling the trigger to get into a trade because it's exciting. Um, and we want to be in the market because we believe that if we're not always in the market, we'll never get paid. Management is where you begin to feel like you have something to lose. Management is where you start watching the ticks go up and down and the adrenaline starts to pump and your pulse goes up and your palms get sweaty and you're so fearful of losing money that you forget that you're in this to make money. So in the KISS plan, the management is designed to help remove those emotions a little bit. Knees weak, there you go. Arms heavy, knees weak. Isn't that a 311 song? And the management plan is 100% mechanical. It's very if-then. Eminem? Oh, right on. And it's based on 2 contracts. And that second contract is important for the new user because it's going to help develop a little bit of trust. The KISS management plan is designed first to understand stop placement. Instead of associating stops with a number, with a monetary amount, what you're willing to lose, you have to associate stops with where the market should not go, and that's what this is going to do for you. But more importantly, this is designed to help you get paid. This is designed to help you realize that trading is about making money. And when advantages go away, it's okay to take the money and wait for the next opportunity. And you'll create your own management plan based on your experience reading the indicators. So your initial stop, guys, has everything to do with where you enter and the conditions. So if your entry is 2 ticks below resistance, what's up, Tom? Long time no see. If your entry is 2 ticks below resistance inside of triggers, guys, your initial stop is 4 to 5 ticks beyond the triggers. That's it. No worries, Better Dad. And this is where the market should not go. And you're going to know where your risk goes before you ever enter a trade. And that's kind of nice because you'll get to make the decision whether or not this $150 per contract is right for you. It should be. If you have odds favorable momentum, if your path is clear, if this is a clearly defined entry, guys, I'll put $150 risk on a trade all day long. Won't faze me, not even a little bit. And they're going to have to come and get me. I'm not going to say, well, I'm only willing to risk 50 and put a stop below resistance inside of triggers. I'm not willing to put a stop in the retracement zone, guys. I have to put my stop where the market shouldn't go. And your targets in the KISS plan are predefined. They're $100 and $200, and that's it. And if they don't come get your stop, if they don't go where the market shouldn't go, it means that you got that reversal bar. And this reversal bar confirms that now the market has bounced off the area. Now the market is going in the direction of momentum. It's confirming that it's going the direction of that clear path. And you're going to redefine where the market shouldn't go at this point. You're going to put your new stop 2 ticks above the reversal bar in the direction of your trade. And now you have $30 risk per contract as opposed to $150. And this doesn't guarantee a winner, and it doesn't say, hey, okay, they're going, you're golden, don't worry about anything. It just says this is where the market shouldn't go, and if they want my money, they're going to have to come get it. You people that go, oh my gosh, I'm 8 ticks into it, and you move your stop right here, market comes and gets it. It's like they have cameras on you. But if they don't, you're going to go to your first contract, your first target, guys, and it's only $100 away. And I feel comfortable saying that nobody in this room would step over a $100 bill on the sidewalk, right? But traders believe that $100 just isn't enough money. There's something about you guys. You're like, I have to make at least $1,000 a trade or trading's not even worth my time. I say poppycock. Most people in this room don't make $1,000 a day in your job, working 8 hours a day, 10 hours a day. Why do you believe you should make it in 3 to 4 minutes, right? Let them accumulate. Now you've made money. Now you're a winner. Now a contract's off. Now your palms aren't so sweaty. They can't take that from you. It's in the account. And you're going to go break even. And break even may not be the best stop, but you'll come up with a plan when you can read indicators, guys. But you have money in the bank and nothing to lose. And this is where the trust comes in. This is where the trust comes in. Because you're going to say, I've been paid. There's money in my account. Life is good. And the only reason that I took this stinking trade in the first place is that my large chart is screaming down. My large chart has the best momentum ever. My large chart has nothing in the way to create a bounce. And it's more likely to push down than to reverse on me. And with nothing to lose, I'm going to hold for the second target, guys. And if it makes it, if that large crowd wins, like they do more often than not, and it goes to my second target, that's a $300 trade, guys. You're out of the market. It doesn't matter what happens next. You've gotten paid. That's the goal of trading. The goal of trading is to put more money in your account than they take out. $300 a day is $75,000 a year. 4 base hits is a home run, guys. That's 6 figures. So I gave this homework last weekend. I'm going to do it again this weekend, guys. If you have never seen Moneyball with Brad Pitt, watch it. Because it will resonate with trading. Because base hits pay bills, guys. So that's my first hour. I promised you everything you need, right? There's the zip file called Everything You Need. Let's recap. How'd that first hour go? Well, we talked about the indicators so you know what you're looking at. We learned the trigger line and Fibonacci rules for when it's okay to trade. We broke them down individually. I gave you a way to study them. I gave you a place to put all of your study and a place to go back. You have the ability to simulate. You can post everything that you do in this room. Win, lose, or draw, guys. It has nothing to do with the trades you take. It has everything to do with the way you're reading your indicators. If you win and the rules are wrong, we call that a short-term victory because luck runs out. If you are following a plan and it doesn't work, post it in the room because sometimes it's just a cost of doing business. You need to know what you're doing right and what you're doing wrong, guys. And that's what we do in this room. That's what I do in this room is we discuss those things. And anything being done wrong, anything being read incorrectly, I offer a solution. You've got a plan now. The high probability trend trade, guys, the best of the best, the KISS plan. The second page is that 50-50 trade, that potential to break trade. And once again, the rules for entry are designed to optimize your chances of success. And you'll create your own plan based on your experience. But guys, if you want to take that 50-50, that potential to break trade with the highest chance of success, it has to come from a strong top or bottom. It has to have momentum on both charts. And there can't be divergence because divergence kills 50-50 trades. You'll see it 1,000 times a week in this room. And then you'll use your high probability trend trade entry rules. So the zip file that I dropped in the room has that KISS plan. It has, not that because that was a new project. It has chart reading 101. It has the high probability trend trade checklist. I'm pretty sure it has daily goals reminding you that small profits yield big results. And then finally, it's got this. And this is for you guys that need it as simple as I do. This is everything that we've discussed in the last hour, consolidated into 2 pages. This is understanding why we teach and what we teach and what it means to you. This is knowing what the indicators are. This is knowing what the rules are and where to find them. It breaks them down individually. It shows you pictures. And at the very tail end of it, it teaches you how to study this by going back and circling tails. 2 pages giving you everything you need to use the software. So Once you have an understanding, it's just practice, repeat, keep going. Guys, that's a termination condition. My trigger lines haven't broke Fibonacci support. And no matter what the momentum is, I have to believe that that termination condition has the same potential to do the exact same thing that this one, that one, this one, that one, that one, that one, that one, and that one did. It's when you begin to believe, well, now it has to go. It's been in a range. It has to break that area. That's what we call avoidable losses when they come and take your money. Momentum pushed that market down, didn't it? Maybe an opportunity for some of you guys in between, but not a lot there. There's momentum, clear path, big tail. There's tail into momentum, path, there's the tail. A lot of opportunities, but weak triggers create the retracement. So we're going to go through, I'm going to take a break. I'm going to encourage you guys to take a break. Nobody should sit and stare at a screen for 8 hours straight. You'll be useless. I'm going to go stretch my legs and refill my water, scratch my dog behind the ears. When I come back, we get into your part. I'm going to look at every trade that's been posted in this room. I'm going to break each trade down, momentum, path, and entry. If you traded without momentum, I'm going to tell you that you did, whether it's a part of your plan or not, because my new users need to understand the looks. And if you traded directly into a termination condition, I'm going to tell you, you traded directly into a termination condition. And it doesn't mean that I'm shaming you. It means that I want to make sure you know you're trading into a termination condition. Maybe you labeled it a 50-50. Maybe you labeled it a clear path. I want to make sure that you understand the concepts, because when you know what you're getting into or what you're up against, you know how to manage. And we'll do the same thing with entry areas, guys. And I made this picture this morning. I am not the trade police. I'm not here to tell you how to trade. I'm not here to tell you how to manage. I'll hand you a plan that you can choose to follow or not. I'm here to help you read indicators and make good decisions, guys. So do what you do, trade the way you trade, and if you want feedback, drop it in the room. I'll give you everything I have. Every ounce of information I have in my brain to make you a better trader, I promise to share with you. I'll be back in 5 minutes, guys. You guys can watch the ES and see what those weak triggers do. Go stretch your legs if you need to. Back in 5. right, y'all. So here's an interesting phenomenon. Support broke and it behaved as resistance. Support broke and it behaved as resistance. Support broke, behaved as resistance. Support broke, behaved as resistance. Has anyone else noticed this? Support broke, behaved as resistance. Resistance broke, behaved as support. Oh my goodness, guys. There might be something to that that helps you recognize patterns outside of the basics, finding more opportunities in the market. All right, let's look at some pictures. Joel got us going. 1, 2, 3, 4. 1, 2, 3, 4. I like to clean up a little bit. All right. Is that my first one? Yeah, okay. So here we go. Remember, guys, I don't judge you. Odds favorable momentum on the large chart. No. And that's a no. So when you start your checklist with a no, be careful. Back of the price clears, it does. Back of the price clears on the 5-1, it does. Enter with a buy or sell. So, guys, I see this a lot in this room. This is a variation of Ron's chili dog trade. A trade that is reliant on having strong triggers, or at least a strong trading market. My brother, in all of his wisdom once, I had a week where I was hell-bent on taking momentum trades. And the feedback that I received repeatedly was, Mark, how can you take a momentum trade if there's not momentum, right? Joel, how can you take a momentum trade if there's not momentum? So I'm not knocking the trade, but let's do, for you guys that are knowingly breaking a rule, and I'm not saying don't, watch this. Because all triggers are above support and the bounce is from a bad top previously, I'll take the trade based on all indicators up, right? So if you're gonna create an exception, and that's totally cool, guys, because that's how trading works. You begin to recognize the advantages, but when you're in that learning process, if you make an exception, take the time to annotate why, because what you're gonna do is you're gonna work that exception. If it wins more than it loses, and Joel, I love this look, if that exception wins more than it loses, well then you want that exception to become rule. Does that make sense, Joel? And I was just thinking about this. Instead of saying, oh shit, that's not right, say, let's talk about what is right. Let's talk about why that probably worked and why that is a good look and why it may be valid to have an exception. And eventually your exceptions become your rules because you're going to prove that your exceptions to the very basic core rules win more than they lose. Odds favorable? Yep. Back of price clears? Yep. And it cleared it, and I love it. Then it gave you that little tail, but you held firm. Great trade. Another beautiful momentum trade. Momentum on both charts. It's hard to stop that. Momentum, back of the price clears. And then Joel, that's just a trend trade, right? Perfect trend trade. And then it fits the rules for your momentum trade. So maybe you add a contract. Maybe you take more. This is what's kind of cool. Is there's one, and then I don't know how you managed it. Maybe you didn't even need to. Maybe you took one off for profits and you put it back on because the chili dog is in play. Great trading, Joel. Good chart reads. And thank you for that first one because I think that's a good lesson. If you're going to make an exception, just write why because it may work its way into your plan. And what a great segue for Pete. Large chart has a strong top. Large chart has momentum. The one thing about this picture, guys, and I do this all the time, is it's labeled as a 50-50. But the arrow is pointed at the exit, not the entry. The entry is actually directly into a termination condition. 100%, rule number 2 not met. Pete took it 5 ticks above the termination condition, the area that could stop the market. And it did, and it created a giant bounce. And he had to sit through 200. Had to have a $200 stop on this trade. And I love everything about it. And I'm certainly not throwing stones. Pete knows that there's trouble there. He also knows that with a strong top and momentum, it's got a better chance of going down than up. So he accepts the risk. And Pete, this is about the most risk I think I've ever seen you put on a trade. Because he knows where the market's likely to bounce with this look. He knows where the market shouldn't go with this look. And you want to talk about courage in a plan, faith in a plan. It goes right where the indicators say it should. Great trade, Pete. And once you know what you're up against, you can manage it differently, a little more aggressively. So, good stuff. Just because it doesn't have a clear path doesn't mean it's not Pete's trade. Pete's been doing this long enough to have an idea of what he needs to do with it. All right, Bob B. All right. Strong bottom, identifying where the market is coming from. Odds favorable momentum, don't show it to me here. Show it to me at the trade, right? This odds favorable momentum has nothing to do with the odds favorable momentum up here. Because you could point here and it could be weak. But we have odds favorable, potential to break. He identifies it as a 50-50. Takes the perfect entry right at support, right inside of triggers. And then a divergence prints on a 50-50. And that's... I agree, Pete, but I didn't want to say it. I agree, but I didn't want to say it. You just didn't give yourself any room to make money. And if that was the reversal, that was a huge loss. I like room to make money. So one divergence on a 50-50 we know can kill a 50-50. Good morning. 2 divergences we know more often than not just destroys a 50-50. 3 divergences even kills a freaking high probability trend trade. Bob said, F you and all your termination conditions, I'm going to hold. And it worked out. And Bob, you got paid all the way up at Fibonacci resistance. But the question is, and Bob, the question you have to ask yourself, is this going to happen more often than it doesn't with that look? Did you trade your plan or did you trade your hope? It doesn't. And let me guess, simulator? You got a chair for you and a chair next to you for your testicles, right? Because it's just simulator. Let's see what happens. But what you're doing is you're teaching yourself to sit through exit conditions. You're teaching yourself to hope and to hold. And I'm going to tell you right now from my own personal experience, hope is the worst management plan you could ever have because it works on simulator and it fails miserably in a live market typically. So I'm glad that you got all your pretend money out of it. But If you took this same look 10 times, you're probably going to lose 6 or 7 of them. And that's not sound investment. And why worry about it? Because when you have strong top and you have odds favorable and you have the potential to break, well, you can take the perfect trade and get paid. In a trade that I would say does win more than it loses, right? The next trade is always coming, Bob. And once you accept that, once you prove that, once you realize that, it's freaking amazing at how comfortable you become at exiting a position and just saying they're going to get me next time. This morning I took the perfect long trade and I had trouble. And I said, you know what? Trouble can stop a market. Let me lock in my investment. Let me go break even. Let me be safe. And if it runs, cool. And if it doesn't, I'm going to exit because that's an exit condition, right? I made my money. I locked it in and I'm good. And then it would have created a loser because that's what happens. Same thing here. Anything can happen, triggers. I'm up $450 in a trade. Holy crap, my advantage is gone. Guys, I locked in 300 arbitrarily. Those weak triggers created a 20-point retracement. It's okay to exit. The next one's coming, I promise. It always does. Odds favorable, back clears trouble, perfect entry, beautiful exit. So Bob, perfect, right? Perfect. Do you need this trade to be a successful trader? You don't have to answer. But that's what you should be asking yourself. You exit at the area that could stop the market. You lose your momentum. You don't have any areas inside of triggers, and you call it a momentum trade. Why do we call it a momentum trade? Because I can't call it a trend trade. I know absolutely none of my rules are met. And if I just give it a name, it justifies breaking every rule that I own to get in and hope it works. And again, I am not judging. But if I go back to that core, I don't have momentum. I don't have a clear path. I don't even have an entry area. Does that make sense, everybody? I won't tell you not to take the trade. I'll tell you you're going to get the crap kicked out of you more often than you don't. So make your own decisions. But if you go back to the basics, guys, and you can't say yes to any of these, your market's going to let you get lucky just enough for Bob to go, man, I'm so stinking good at this. I am so stinking good at this. Let me take my wife's diamond ring fund. Let me take, sorry, that's my untitled workspace. Let me take my kids' college fund. And let me continue to hope that terminations don't stop the market. And let me continue to hope that weakness doesn't reverse the market, right? Or just find the ones that make the most sense. Find the ones with the highest probability. That's pretty sexy. That's pretty close to sexy. So just throwing that out there. Bob, you are 50% rock star and 50% aggressive on that. I like it. Better Dad, are you back? Me too, man. Me too. That bull looks angry. Well, let's see if we can do that. Sharpen his horns with the chalk like in the cartoons. Not a trend trade, says Ron. This is counter trend, which means everything says down and he's going up. Really shouldn't work trade. I like that you got the little winky in there. So guys, let's go through and reverse engineer Ron's trade. Large chart says down. But the large chart has weak triggers, which means anything could happen. And Ron says, well, let's see what my small chart's telling me. And his small chart's telling him, hey, Ron, I know it looks like you have a clear path, but without that momentum, look at how your small chart gave you the perfect termination condition. 3 divergences in the same price range. So you don't have weak triggers. You don't have a clear path. You shouldn't, under any circumstances, be thinking short. And Ron says, well, when that third divergence prints, let's see if I can't hit a base hit up. Because he's done a lot of study that when these are weak and these divergences come into play, more often than not, your large chart produces a reversal bar. And it may not go much further, but you'll notice he got paid right at the reversal bar. This goes against the whole new user concept of don't fight the trend. And it takes chart reading to produce small winners that add up to big days. Great job, Ron. Let's see, who's next? Paul, let's see what you did, brother. Dun, dun, dun. Odds favorable momentum, clear path, and I love that. Wait at the area, don't let them trick you into going early. Wait at the area, follow your rules, stick to your plan. And Ron says he never saw that trade till he learned the high probability trend trade. It's great how that works. Guys, this is having so much confidence in your plan that you won't chase the market. They'll either give you your entry or you'll simply not take the trade. And I love seeing that. I love seeing that. He knows where it should bounce. And he doesn't get caught in fluctuations. Great job, Paul. Let's see who's next. Andy Man. Na 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 na. Large chart says odds favorable momentum and a clear path. You take the little momentum kind of entry, and then 3 divergences print. You got paid low, and then 3 divergences print and break even. No harm done. Great trade, Andy. Great trade. Morgan. I like when Morgan posts because it means I get to yell at somebody. Not really, Morgan. Strong top. Why is a strong top important? Because when decisions are made at key areas that are so impactful to reverse the market, it should make you feel good. Odds favorable momentum and 50-50. And you said 1 divergence, but with a strong type, I can negate 1. Pull back to areas. Would have been a good pull, but missed this one, so took a pick instead. So remember when we said eventually your exceptions become rules? The KISS plan says don't trade with divergence. Morgan's done enough study that he says, man, when I have a strong top, I'm willing to give up 1 of them. I'm willing to pass and to ignore 1 divergence because with this level of strength and that impactful decision, I can find a way to capitalize. And I agree 100%, Morgan. This is a great picture, great annotation. Nicely done. Andy Man again. What are those? Andy, you've got some little flippity-floppity things there. Large charts coming off a termination and it's screaming south. I'm not sure why you got in there or how your stop kept you safe, but I'm glad it did. You wrote it down all the way. All right. Ron says, check it out, Mark. When the back of price clears the decision-making point, It's not odds favorable momentum, but it is a strong trending market beginning. So with that strong trending market and room to the next fib, he jumps in and gets out of the fib. 10-second base hit. Nice. And guys, let's talk about why does he let the back of the bar clear price? Or the back of the price bar clear a fib? Because this is where decisions are made. And that's what it looks like at decision-making points. So he lets it get below it. He lets all the price, it's like a starting block for runners, yeah, coming off of it, trading away from fibs. Instead of trading into fibs. Trading into fibs is where we take profits. Trading away from fibs is where we start making profits. So, good stuff. Better Dad, have you found your way back to the room yet? Guys, that's all the pictures. Oh, well it was. Bob B, let's see what we got. Strong bottom, pivot, stop out. Great read. Odds favorable, and it's a clear path. You get in at the 1-to-1s. It goes a little lower, no big deal. But with odds favorable and a clear path, divergence doesn't phase you. It just pulls right back to another entry. This pivot stop out doesn't phase you. It pulls right back to another entry, and it goes straight to the fib. Bob B, the man, this is gorgeous. These are the trades where I get in, and if I get paid, I add on, and if it happens again, I add on, and I find myself taking 3 or 4 contracts off at that final fib because it just keeps giving me high probability trend trades. These are amazing. And if you use that KISS plan, here at 26, you exit 1, and when it comes back to the mid-band, you put it back on and you make money twice. And you exit 1. And then when it comes back to the mid-band, you re-enter. And you can make the same $100 3 times in that range. Right? 2 contracts on, 1 off at 100, put 1 back on at the entry. 1 off at 100, put 1 back on at the entry. Run it to the fib. It's fun when you do stuff like that because you're like, oh, I'm the greatest trader ever. And this is kind of like the unicorn. It doesn't happen that often, but when it does, it's pretty awesome. And I love this. You moved your stop. Well, if you did it at the lower synthetics, that's tough because you're in the retracement zone. But two ticks behind this pivot, 2 ticks behind this pivot, 2 ticks behind this pivot, the market's giving you stop movements all the way up. Does that make sense, Bob? Synthetics in the retracement zone, but once it does that bounce and confirms, you redefine where the market shouldn't go. So Joel, hypothetically, I enter with 2. Whoops, I went long. And I exit 1, and I've got 1 trade left, or 1 contract left. If I want to re-enter, and here, let me do this the right direction. So I sell. Let's say it hits my first target. So I've got 1 contract on, and I'm saying to myself, man, if they come back up here, I want to be in that trade again. I'll wait for them with a limit order the same way I would a trend trade. I think that's the easiest way because if I'm in over here, I've got my reversal bar, I've taken my profits, and if it comes back, I want to be in that trade. So I like a limit order. Just showing off a little. I love it, Pete. 18 grand today. Does everybody see that number? $18,000 made today. Guys, it is 9:40 a.m. Central. That's awesome, Pete. That's all Nexgen. That's all you using Nexgen. But I appreciate that you'd put that, and I like that you'd show off, guys. I like it when you show off. Once you come up with your plan, this isn't outrageous. This isn't a one-off. once you learn how to follow your rules, once you're good at reading your indicators, guys, it's crazy. It's crazy what can be accomplished. I think most traders struggle with that because we can't fathom making $18,000 in a day unless somebody dies or we sell a house. But it's possible. Pete just proved it. That's a live account. Great job, Pete. All right, Better Dad is back. Let's go through Better Dad's pictures. Boom, 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 boom. 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 Sound effects make everything better. All right, Better Dad. Odds favorable. 50-50, weak bottom. So we've already got one rule not met on the KISS plan. Didn't get in at the areas inside of triggers. Got in after trouble. It bounced and looked promising, but I missed the 3 divergence printing and trend turned against me. Broke the rules for assertive management, got expected results. So, Better Dad, 50-50 weak bottom. Guys, I can't stress this enough if you're a brand new user. Do it easy first. Let it be easy first. And you'll get to a point to where you say, nope, yep. And then where you entered, you didn't have strong triggers. You had already had 2 divergences. You're working with 25% of what makes a 50-50 trade good. Why? Fear of missing out, right? Better Dad, you were convinced that if you didn't get in that move, it was going to go without you. And if it went without you, the market would never produce another trade. It's okay to follow a plan. It's okay to keep it simple. And more than anything, it's okay to miss a trade, guys. Especially the wrong trade. NASDAQ directly into a termination condition. Strong bottom. Directly into a termination condition. 50-50 on a fib. And you got slaughtered. Better Dad, do you remember that rule that says if the small triggers are a full bar away and you got in after, they already tested them, then came back. Don't fight them. But termination condition. Pink 1-to-1s on the NASDAQ are a termination condition. And that's okay. You've got to take some of these. Got to take some of these. So you remember, oh my gosh. Don't fight triggers on the NASDAQ. Don't trade into termination conditions on the NASDAQ. You've got to be hyper-focused on rules on the NASDAQ because it happens fast. I love that you're doing this. Because this is, oh my gosh. Let me mouth off to the bully and get punched in the jaw. Oh, that hurt, but I'm not going to forget that. Let me piss off my girlfriend and get stabbed in the thigh. Oh, that hurt. But I'm not going to forget that. You got to go through every scenario that's going to hurt you so you can learn how to avoid it. Odds favorable, 50-50, weak bottom. You're still trading with the divergences. At least you made some money on this one. Huge amount of risk on a 50-50 that already has things stacked against it. So Better Dad, is this live? Or are you doing this on market replay? I'm going to encourage you, Better Dad. And I'm not going to tell you that you have to. But I'm going to encourage you, especially on NASDAQ. Dude, you gotta have some idea what screws up a trade. Because NASDAQ moves fast. And it will kill you fast. And I've watched so many people want to trade the NASDAQ because they see someone else doing it. And dude, you're breaking rules all over the place because the adrenaline of the motion has you amped up. Odds favorable, clear path. Don't fight the small triggers on the NASDAQ. They'll run your ass over, and they did. If you wait for the close on the correct side, you at least have a fighting chance. Don't fight the triggers on the small. Pink 1-to-1s are not an entry. They're a termination over here. They're not an entry spot. Mid-bands, fibs, yellow 1-to-1s. Perfect look on the large chart. Can't fight the small triggers. You got to get in on the other side or it's just going to run against you. That's it. Fibs, mid-bands, yellow 1-to-1s. Pink 1-to-1s on a 34.5 qualify. That's why they're terminations on the NASDAQ. Not over here. But do you see those small triggers, Better Dad? You got to learn to not fight them. Because if you get in on the close on the correct side, it is money all the way down. And it's easy money. And that's your NASDAQ nuance. Don't ever fight the small triggers on the NASDAQ. I love that you're getting these lessons, though. And now you're adding market flow because I'm not confused enough. Pivot market direction change. You don't know about that pivot till... shit, way up here. Nothing changed. No terminations. Not an HVA trade. You don't have a termination. You have a pivot from the middle of nowhere. You have large triggers down. You have fast triggers against you. You have every indicator on every chart down, and you're hoping that a green line stops it and makes it bounce. And this time it did. Just to aggravate you. It's not out of the scope for the class. Not at all. HVA trades are amazing, Better Dad, but let me show you something. I hope you'll appreciate this. When I start trying to do too much, I do everything wrong, guys, because I confuse things, because I omit rules. Rule number 1, reversals or breakouts of Fibonacci. Don't break below the area. You gotta have rule number 1 met. You're not even close. Well, Better Dad, I agree 100%, but I won't tell you how to trade. But I'll tell you, you're on a freaking collision course with frustration. Because you decided that you had it, and now you're moving forward, but you didn't have it. And that's okay, that's normal. Not knocking you. Hell, there's even a picture about it. No idea what I'm doing, but I'm going to do it. I got it. And you're on your way down to the I don't know shit stage. And it's okay, because I'm very willing to tell you that's exactly where you're headed. I've seen it a million times. And now this one makes sense because it starts at a termination. And then you get an HVA. But the rule that you broke is you don't have a clear path. I like that you're thinking about it. And you'll get there. So, let me find another picture. And I'm just going to share this recipe because I appreciate all of you. And I want you to hear this so many times that it resonates, that you think about it. Learn the rules for when it's okay to trade. If you're breaking your rules, you haven't learned the rules yet. Or you don't believe the rules. You don't trust the rules. You're trying to adjust the rules. Learn the rules. Practice. Practice the correct rules. Don't say, well, it's a new market. I'm just going to try everything and hope for the best. Practice the rules. You've been handed rules, and they've been proven to win more than they lose. Do your replay. Go back, fix your mistakes. Take pictures. Repeat it until you can take the correct trades. And then once you guarantee you're there. Better Dad, I'm not a rules follower. I suck at following rules in life. I really do. The only place I've ever been able to follow rules is typically in my job. And this is my job. And if you want this to be your job, you got to be able to do it. You are so good at reading indicators so quickly. I know. Most people, Better Dad, start college, and that's year one. And they say to themselves, I'm going to be an engineer. 3 years later, they're still not engineers, but they're smarter. 4 years later, they're finally an engineer, but they don't get to head a project. About 7 years later, you might build your first bridge, right? You might have gone from that $55,000 a year entry-level engineer getting abused by the old dudes that still smoke cigarettes by the water cooler. But now you're at six figures, and now you're taking on the next crowd. Day traders want to be brilliant in the beginning. Guys, you've got to build a foundation. You've got to get there. The average human needs at least 7 or 8 weeks of solid repetition of doing the right thing before it becomes second nature. Give yourself some grace. And I will strong hand a little grace at you every now and then and remind you it's okay. You're on a great path. Be a little patient. You're headed the right direction, right? Just because Waze tells you you have to take something that isn't comfortable, it doesn't mean Waze doesn't give you the best way. I'm the worst. Does anyone have Waze, the mapping app? It's okay. That's not a chew out. That's not a chew out. I haven't been mad at a student yet, Better Dad. That's not true. I was mad at one guy once. So when I have Waze, I'll turn it on. And then when Waze tells me to do what I don't think I should do, I tell Waze to go ahead and I do it my way, and then I get caught in a traffic jam. Has anyone else ever done that? That's how my brain works, Better Dad. True story. What do you know, Waze? You and all your GPS and satellites and all that sort of stuff. I'm going this way. And it gets me every time. And my wife's like, Mark, why do you even have it if you're not going to use it? I'm like, because I'm freaking brilliant. Dang it. And I have time to think about my brilliance in this traffic jam. But that's human nature. It's totally human nature, guys. And we've got to. Yeah, and we've got to. But Better Dad, at your job, you're probably the expert, right? At my old job, I was the expert. I was the guy that they flew people in from all over the country so that I could train them. I wasn't the guy that asked questions. I was the guy that answered questions. That's a hard transition. It's a hard transition to go from the educator to the educated, especially for people that are smart. So it's okay. I like to have these conversations, guys. I think these conversations are so important to remember that you're not doing what nobody else has ever done. You're literally right there. Yep, I get it. I get it, Better Dad. Stupid egos, right? Stupid egos. All right, let's see what Cav did. Cav said, check it out. I've got weak triggers, but I do have a clear path. And he took a shot at it to see if it would break, and it didn't. Stopped him out. That's okay. And then when it gets up to the middle of nowhere, Cav, you say, you know what? They really should have given me that short. I know that the small triggers are up. I know that the large triggers rolled. I know that I had divergence. I know that I don't even have a freaking area to trade from, but I'm going short. If you wrote out the annotations of what I see on the chart, that's what it would sound like. And that's not so much just below the mid band. That was a good 6 points below the mid band. So, Cav, I know you have your reasons. I'm glad you got paid. That's a tough look. You anticipated something, you didn't let it actually happen, and it worked this time. Good job. Odds favorable, clear path, perfect entry. Easy money. That's the one. That's the easy one. And then better dad, as you focus on NASDAQ a little bit, I want you to see this. There's that lesson again. If you are a full bar away, take it at the area. But look what those triggers tend to do. See how they push it right back? So this is one of those looks where I'm in, I take one off at the area, two off at the area, go break even. And if it comes back, I'll re-enter on the correct side and ride that wave up. Does that make sense? This is a great entry for the NASDAQ because you have that space, but there has to be a willingness to manage or a willingness to hold. And Cav's willing to hold because look at his large chart. It's perfect. It's perfect. Great stuff, man. That's all the pictures. And I hope that doesn't feel like a chew out, better dad. If you really want to get chewed out, give me your number. I'll give you a call. I'll rip you a new one if that's what you need. But I won't do it here in class. All right, guys, that's the second hour. We survived it. A lot of great lessons. I think the best lesson is that we're human. The best lesson is that we're all in the same darn boat doing the same darn things. We all have the same goal. And I think that when we make ourselves a little vulnerable and admit that we're human, I don't know, it just feels better to me. I break rules, guys. I learn new stuff and try to do it on live accounts. You were built in a negative feedback arena? Medical, right? My wife was cardiothoracic OR nurse at Methodist, the DeBakey Institute in Houston, Texas. So there are procedures and tools that are named after surgeons, and she worked for them. She actually had a surgeon, better dad, in the middle of a surgery. Oh, wow. Right on. DeBakey, yep. He was already gone by the time she got there. She had a surgeon in the middle of surgery back away from the table and take a knee and ask the Lord to make him stupid so he didn't feel so alone. So I understand that. I totally understand where you're coming from. That's a rough. And if you survive it, you're clearly a badass. And she definitely is. So good stuff. All right, guys. I'm going to take a quick break. And when I come back, yeah, the area, it's the area, especially if you're cardiothoracic. She was the director of surgery at Dell Children's for a while. Did a lot of cardiothoracic in that arena in Austin. I don't know how you guys do it. It's amazing. It's amazing. She's hospice now. She's done losing people on the table. That's why you're here. Right on. That's awesome. Very cool. She loves her anesthesia, people. Always have. Sick of 80 plus hours a week? I bet. Well, all the more reason to follow a plan, right? All the more reason to follow a plan. All right, guys. I'm going to take a break. When I come back, last hour belongs to you. It's Friday. There's no more. Well, there's a couple pictures to look at. We'll look at Joel and Boaz when I come back. And we'll answer whatever we can. And if we run out of questions, we'll send you off to the weekend. I'll be back in about 5, guys. right, y'all. Here we go. Home stretch. Joel, let's see what you did, my friend. Make that a little bigger. Strong triggers. Yep. No termination. Better believe it. Room to the first target. Absolutely. Oh, Joel. Is that an entry at an area inside of favorable large triggers? Or was that an entry with confirmation from the area because it wasn't inside of favorable large triggers? I just want to make sure you know the difference. What do you think, man? Wasn't perfect? Did you wait for confirmation? Cool. Don't be afraid to put that in your annotation, because what are you doing? You're writing a recipe. So instead of putting what didn't happen, what the rules say, right? Do this. Entry was not perfect. I chose to wait for confirmation. Easy money with that large chart look, right? So what you've done is you've said, all right, I know that my rules aren't met. I know that rule number 3 isn't in play. So I'm going to make the choice for confirmation. I love it. I love this trade. And great hold all the way up to fibs. And then when it didn't blink, you got a little extra out of it. No. So better, Dad? The rules say area inside of triggers, right? So under no circumstances could you say that that's a rules-based entry for the high probability trend trade. And better, Dad, this is the progression. And this is one of the challenges that happen to people is knowing when to use the exception. So until you know when to use the exception, none are always the best option. But look at his large chart. His large chart is coming from a strong bottom. It has the best momentum ever. There is nothing between him and targets. The only thing that's a little sideways is he doesn't have an area inside of favorable large triggers. So let's do this again. So he's literally saying to himself, this is 72 kinds of awesome, except for that one little thing. And since I'm missing one of my advantages, well, I don't want to just arbitrarily get in at a mid-band, hoping that a mid-band holds. I'll force the market to give me confirmation. I'll force the market to give me a reversal bar in the direction of the trade. Because what does that do? The normal stop, the rules say, put your stop 4 to 5 ticks below the triggers. Hell, that's right at the mid-band. A reversal bar gives you a place to put your stop. It defines where the market shouldn't go. Does that make sense better, Dad? So if you're talking in terms of advantages, and this is that little thing that I made this morning, because I'm thinking about this stuff. Which one was it? If I don't have momentum, I insist on the other two. And if I don't have a clear path, I insist on the other two. Absolutely better, Dad. And if I don't have the entry, I insist on the other two, but then I force confirmation, because great entries are what define risk. And if I can't define risk, then it becomes problematic. So what you do, and man, another segue, I love this. And you've probably heard this in the room, but I think it bears repeating. The key to everything is foundation. And I'm not just talking to you, Better Dad, I'm talking to everybody in the room. Foundation, understanding the basics, and then each day and week compounding a little bit. That Japanese philosophy of Kaizen, 1% better. So for the new users, I blanket you with very conservative rules. Recognition of advantages, a solid plan. Learning to read your indicators. So for new users, and Better Dad, I think you qualify. It appears that all termination conditions are bad, that no momentum is horrible. And if the area is on the wrong side of the triggers, for the love of everything, don't take the trade, right? But that's not always the case. It is these blanket rules because it increases the likelihood of success. Yeah. I love that phrase, increases the likelihood of success. If you keep it black and white in the beginning, you're more likely to win more than you're going to lose. But they're not always bad, and sometimes exceptions are made, but you have to have the experience to know when to do it. So at first, this is no trade. 100% no trade. This sucks. No trade. Won't do it. But I begin to notice that with just a little bit of confirmation, there's a lot of opportunity. And that's how plans change. And that's what I was saying to Joel earlier. If you find yourself making exceptions to your rules, annotate on your picture. Why did I make that exception? Why did I choose to take the trade when I didn't have an area inside? Well, it's because my large chart was perfect, because the odds were favorable for the market to continue up, because there was nothing in the way to create a bounce. I wanted to be in a long position, but I didn't just want to jump in all willy-nilly. So I waited for confirmation. And Joel, you did an awesome job of that. But annotate your chart to say it. When you make an exception, define the exception and why, and eventually it'll work it into your trading plan. You're writing the recipe. Good stuff. Great stuff. Awesome stuff. Does that make sense, everybody? Boaz says, check it out. With this level of momentum, the mid-band's not behaving as a termination condition. The entry is beautiful. Let's make money. I love this trade, Boaz. Absolutely beautiful. Momentum and path, find an entry. Momentum and path, find an entry. And then Better Dad, maybe Boaz said, it could go from the 1-to-1s. It could go from the mid-band. It may retrace all the way to the bottom of these triggers. That's a lot of risk. Let me insist on a confirmation bar so I have some place to put my stop. Does that make sense? Doing the same thing. Have you noticed, Better Dad, that all of his trades look pretty much the same? Almost 100% identical. Did you notice that none of your trades even looked like one another this morning? Because you got excited. I love it. You're becoming a chart reader. And you're starting to trade your chart reads instead of your rules. That's normal. That's normal. It's not harsh, it's true. There's a big difference. Saying, Better Dad, you're an asshole because none of your trades look the same. That's harsh. And I would never say that. But Better Dad, the more looks you try to take, the harder it is to catch the good ones. Great job, Boaz. Joel. Triggers not really spread, but we still have momentum with room to target. So tail into momentum. The scissors are closing, but they're not totally closed. The path is absolutely clear. And the fib is right inside of triggers. So here we go again. I don't have the best momentum, but my path is clear. And I do have an entry. Oh my gosh, let's do this again. I love this. You guys should have this on your desktop. Still have it. Looks good. I like it. Let me take the trade. And because I don't have momentum, let me make sure I get paid. I mean, this is great. Great trade, Joel. And it fits the recipe. You had it all. It's a tail end of momentum. It's not odds favorable. But until those scissors close completely, you still have a shot. I like it. Pete. Strong top, One of the things you guys will notice with Pete is that almost every chart that he posts in this room begins with a strong top. And Pete, you are darn near flawless on always having a strong top or a strong bottom. I've noticed that with your trades. Momentum is almost always a part of the equation with Pete. And then this is where the trade comes from, and he had the potential to break. And I don't know what you're pointing to over here, but this is where the trade is. Smalls are through, large are not. And at the top of the window, and it's just easy money. And guys, you'll notice that Pete doesn't hope that that fib breaks. Pete says from 53 to 44 is 9 ticks on 4 contracts, which is a $360 trade, respecting the fib and taking all of 8 to 10 seconds to do it because momentum, strong top, potential to break. Beautiful trade, Pete. Guys, you will find your way. I promise you. Well, we saw that one, didn't we? We did see that one. I think I clicked twice. All right, weak triggers, butt. Oh, Joel, you showed me your butt. Weak triggers, butt. Rules not met, but I'm trending up. You have been forever. I have a clear path. I have weak triggers. I don't have any areas inside of triggers. I'm going to take it anyway without confirmation, and I'm going to hope. You did not buy after the confirmation bar. You bought on the way down, Joel. Guys, don't annotate what you wish happened. Annotate. You got in here, but it's not a confirmation bar because it's not from an area. It's just a fluctuation in the middle of the triggers. Does that make sense, Joel? Not a confirmation bar. And then you bought on the way down after divergence with weak triggers on the wrong side of the triggers, hoping it would go up. And you even said I was hoping it would make it to the 1-to-1s, and it did. And then you gave everything back on the third contract. You completely negated an entire contract's worth of profits plus some by refusing to believe that with weak triggers in the middle of nowhere, things could stop. Does that make sense, Joel? So a couple beautiful trades, and we're going to call this one your train wreck because you added on to a losing position with only one rule met. And then you ignored exit conditions because you hoped it would continue to go up. And again, if that's your trade, rock star. But with weak triggers, doesn't it make sense that it may not push as far? And with a divergence, doesn't it make sense that things could go sideways? Probably going to lose that one more than you win. I'm glad you won. But remember, we're writing a recipe for long-term success. We're writing a recipe for consistency with what we do. I like it. You guys are amazing having the courage to post in this room. It's not easy. You guys remember the gap theory? If price reaches the mid band and the large triggers are a full bar away, it's likely to close the gap back to those triggers, which means that this long are more likely to fail than win. Did anybody get run over on this one and said, oh crap, gap theory? Price reaches a divergence low, all the triggers are above it. Price reaches yellow 1-to-1s, all the triggers are below it. Look at that. Your software has given you a nice little range you may want the market to break out of before you try to take a trade. Thank you, rule number 2. Oh, and right here the colors didn't match. Pretty cool, right? What did that look like? Well, that looked like the perfect Kiss Plan $300 trade, didn't it? All right, here comes the most solid lesson I can give you guys. This is a $300 trade per the Kiss Plan. This is $1,000 worth of losses trying to predict. You guys see it? No rules met, easy to lose. Every rule met, easy to win. Your goal is to believe that. Your goal is to study that, to practice that, to prove that. And guys, if you never miss this one, you couldn't care less about a market that looks like this, because you know that one's coming again. No. All right. There's the one Boaz took. So that long to this long was 40 minutes. 40 minutes of doing nothing because the rules weren't met. Worth every penny because you avoided losers. There's another one. That was only 5 or 6 minutes. If you didn't catch any of these because your rules weren't met, congratulations. But you're not worried about it because you probably got paid right there. And you're not worried about it because you may have been paid right here. And then once again, doing nothing, doing nothing, doing nothing. And all of that waiting pays dividends right there. All of that waiting pays dividends right there. And you said to yourself, you know what? I don't need this one into the term because I just got paid and I know the next one's coming. And I'll sit on my hands and do nothing until it presents itself. Guys, that's day trading. The more you learn how to do nothing, typically the more money you make. John Novak and I have been playing with a strategy for the last, we saw this one. Repost, Joel. You want to double check. So John Novak and I have been trading with a strategy. And one of the things that we do when we're developing a plan, and it's fun to develop a plan because it's all around advantages. It's 100% based on advantages and patterns. And that's all anything we ever do is. Oops. So what we do is we start with a basic look. And we define the charts that we need it. And we trade it. And typically there's about 150 trades a day when we start. And then we start to look for patterns. And we start to omit variables, if you will. And then it goes down to about 100 trades a day. And then we refine entries. And it goes down to about 70 trades a day. And then we omit more variables. And it goes down to about 40 trades a day. And eventually, we come up with a describable pattern and a set of rules. And even the best patterns we've ever done typically happen about 15 times a day. we've done all of this work for you guys and dropped it into the KISS plan. But this is what happens. And guys, this is, I would say, no less than 500 pictures. No less than 500 annotated pictures to start to get good at something. To start to recognize it, to start to see second nature, to start to recognize the things that are robbing it of success. And this is what John Novak and I do. And we've done it on NinjaTrader. We've done it on the TV platform. So for you guys that are going to go over to TV and maybe you're going to beta test for us, we've gone through and we've created a trading plan based on the indicators we're able to reproduce over here. And it's the exact same thing. Understand that it takes a while to build a plan. It takes a while to trust a plan. It takes a while to recognize the variables within a plan. Don't be in a hurry. But know that with the KISS plan, if you keep it that simple, you have a plan proven to win more than it loses. All right, Joel. On a 50-50, what does it take to say to yourself, I have the potential for this area to break? You remember what the most important factor of a 50-50 is? What breaks areas? Momentum. Momentum breaks areas, Joel. Momentum smashes fibs. You don't have it. This isn't a 50-50 trade. A 50-50 is a trend trade. You want to know what you did here, though? Because it's brilliant. It is brilliant. Your large triggers are still down. Whoops, sorry. Large triggers are still down. Small triggers aren't even above them. You don't have any momentum at all on this trade. They don't match. All of your trigger lines are below this fib. You don't have a clear path up. Does that make sense? Cool. So let's back it up and let's go to the good stuff. Triggers didn't make it through the fib. They tried to, but they really didn't. So you have a termination condition. Your small triggers, the faster triggers, have already rolled in the direction coming off the fib. Price pulls right back to the small triggers, and it looks just like that, a pull back to the large triggers. Joel, what you just took here is a trade that Nexgen taught in 2004. Understanding key Fibonacci areas, and when they stop the market, allowing the large chart small triggers to roll and selling a pullback to those small triggers. You, my friend, did it flawlessly. And you waited for the confirmation. Do you see how your small chart is odds favorable momentum coming off of a termination condition? You use the idea of a potential strong bottom, a great termination condition, and let the small chart lead the way on this one. Confirmation bar. I love everything about this trade. The only thing that I'm not sure of is the second contract, why you held it. That exit at the fib is perfect, man. So it's not a 50-50 trade because 50-50 is a trend trade. And you haven't established a trend yet. You don't have momentum in the direction of the trend. This is a brilliant use of a top or a bottom. And it's a trade that Nexgen has been teaching for decades. Look at this. Termination. Do you see how it pulls back to the small triggers up here? That's the exact same look right here, Joel, that you have right there. It's a powerful trade. And I like that you let it confirm. which is even better when you don't have momentum or path. At least you force it in the direction you wanted it to go. Nicely done. Does that make sense? Did all that make sense? Awesome. I'm telling you guys, you're going to stumble into bigger plans. And it's all just going to come from those basics. I think I have this trade. I'm not sure. Let me drop it in the room and talk about it. Crude oil's doing a whole lot of nothing, right? I can't go up because I don't have a clear path. I can't go down. It's not with the trend. This is your 90%, ladies and gentlemen. This is your 90%.